Hi, everyone. Happy New Year and welcome to the first episode of the Your Money Life podcast recorded in 2026. This is going to be a short one because we're going to do housekeeping. We're going to talk about what we're doing going forward. And we're just going to look back at the markets this year to see what the scorecard is for the year and how we did in general. So, first and foremost, like, subscribe, five-star rating, review. Let's go over the housekeeping. We will be changing content. We will be upgrading content, upgrading the pod, upgrading the way things are done. I want a fresh look and a fresh look at eyes on how we do content. So that means getting a little bit more in depth, getting a little bit more production wise, getting a little bit more in tune production wise. It's exciting. We're going to do a lot of things, maybe rebranding, doing a whole bunch for the content. That includes the podcast, that includes the New Street Advisors Group socials, TikTok, New Street Advisors Group IG, all these different things, Twitter, Facebook, all these different things. We want to make sure we revamp it so that we're giving a fresh perspective. So we know that there's a lot of people that need this information that I'm dispelling, and I've been one to give some information and hold back a lot of information, right? And so we want to change that up in 2026. That's an intention that will be set. So keep an eye out for that. We're going to really, really do it differently. This podcast, again, has been going on for many years and many listeners and different things. And we want to make sure that people are getting their fair share. 2026, let's go and look at it. Like, let's look at the scorecard. Everyone had different opinions on what things would look like in 226. So let's look at it. We got our scorecard here. I want to just give you guys so listen, year to date. Of course, we know what year to date means from the beginning of 2025, which would have been January 1st, to December 31st, 2025, which was yesterday for those that are listening today. The market, the S&P 500 gained 16.39%. That's 16.39%. Another strong year. And the Dow Jones, which is a little bit more stalwart blue chip value companies, gained 12.97%, a solid year. Let's look at the NASDAQ, which is high growth. We know it's high growth tech, high flying, 20.36% gain. So just even a simplistic breakdown, $100 in the market that was just all in the NASDAQ. It was in the QQQ or a NASDAQ ETF at the beginning of the year went from $100 to $120.36. So again, that's just the power of the markets. We've talked about it. There are a few people that were beginning of the year saying the world's going to end, change of all this administration, all this stuff that made them believe that it was dire dystopian future. And I knew, everyone knows this. You get a couple people that I think by now people get the gist, right? Like even if there's bad things that happen, even if there's corrections in the market will continue to chug along and along again and again and again for many years to come. Now, will we always get double digit gains and huge growth? No, we won't always do that. Remember 2022? That was the last time we had a bear market. And then we haven't had that for 3 years now. A bear market will come back again. They always do. But for now, we can enjoy 3 straight years of gains. So many, as this analyst said, as you see on Facebook, excuse me, on YouTube, the analyst, this other analyst is giving his scorecard. It's 3 straight years of double digit gains. That's 3 straight years of double digit gains. Remember, think of that 3 straight years of double digits. So you can get a gain in a year anywhere between 0 and 9%. That's typical. The average of the market over a long period of time is roughly 7, 8%, maybe 8 or 9% if you're including total returns, which means including dividends. But getting double digits, that means 10% or above. That's not supposed to be all the time. And we've got that 3 years in a row. The pullback was in April, the tariff announcements. We went through that. We climbed over that wall. Earnings. What do you mean earnings? AI companies are crushing it. They're buying cloud infrastructure, they're building infrastructure. ChatGPT getting funded at a $750 billion valuation. This is complete AI tech driven world that we're living in. So that brings us to a prediction for 2026. What do we see in 2026? Well, a few things. One, we're still a proponent of crypto. Crypto will probably sit in a bear market for a little bit, but I think in around end of second quarter, roughly in the second quarter, people can start buying that again if they haven't been already, right? I think it's a good time to buy, but you'll see the bear market for crypto end roughly around midpoint of 2026. So you can start accumulating, continue to accumulate, midpoint of 2026, we'll see that bounce back. And for general stocks, again, I think we have another good year. It's going to be primarily driven by the stalwarts that we know, tech, AI. Google's a good name that is going to be strong with Gemini coming out, really looking the new Gemini model coming that came out. It looks really strong. They have so much information. You're having billions of people feed information into your search engine for decades. They're a strong name that's going to do really, really well. Their model, AI model, is really, really strong, and people starting to use it and like it. They've kind of jumped the shark over ChatGPT as far as like expertise use. Maybe mass adoption. ChatGPT still has that edge potentially, but we'll see the numbers when they shake out at the end. It's a long-term play. So we still like all the big AI names, the NVIDIA, Apple, Microsoft, any large tech names are going to continue to do well. Amazon going to continue to do well in this coming 2026. Now, I don't know if we'll get another double digit gain year. I can go on, could go on record saying, again, that we may not get a double digit year, but we'll definitely see more all time highs this year. I think we'll have another good year, positive return year, but just maybe not as good as this past year. Remember, I keep undershooting the market. I think last year I said the same thing. We'd have another strong year, positive, but it wouldn't be super crazy. But again, we just keep seeing these numbers that are really strong in the market. So again, we're saying that we have another good year. We will do well. We'll see more all-time highs. We just may not hit the same levels of this end of year numbers, but we will have all-time highs and we'll have another positive year is what we think. Rates, there are going to be more rate cuts in 2026, so expect that. And another thing, our thesis will change if we see a negative turn in unemployment. So we get to 5%, over 5%. We see a pretty negative turn in unemployment over 5%. And if we see that, that's the big thing, a big cut in unemployment. And that's the major thing. If we see anything that's shaky with inflation or with the Fed's moves as far as rate cuts. But the big thing is unemployment. If you really, really see that really jump, it may be a tougher time for folks. So that's one of the bigger things. If you really see that jump, it'll be a tougher time. But those are kind of the standard opinions for 2026 as we sit now. Of course, subject to change as new information comes. But again, another strong year for the market. That's just another strong year. We're not jumping in on these trends of different things. Everybody starts talking about like gold and silver and different things that kind of had a really, really strong year, right? Like, commodity gold and different things had strong years. But now with everyone and your mother talking about it, it's time for those people that were in there to get out, right? When everyone is starting to bring up that idea, the idea is washed. I'll be the first to tell you. You probably want to start looking for your profit taking sometime soon. And we still like our tech. We still like our securities that have done really, really, really strong over the past many years. So um, we'll keep going. What we will do again, we are going to provide new fresh content. So keep your eyes on the new fresh content. Keep commenting, keep engaging, keep sharing this because we're gonna really kick it up in 2026. New Street wise, again, another strong year for New Street. There's tens of millions of assets now managed, highest level of assets managed in the history of the company, highest level of client households and accounts in the history of the company, and a lot of exciting stuff coming up in 2026 with partnerships, with content partnerships, and a lot of different things we're doing to shake it up for 2026. So keep an eye on that. We will continue to be more open and let you guys know what's going on. So once again, folks, I'm glad you joined us. And as always, make sure for this year you share, like, subscribe, keep sharing this in the new year. We will continue to talk to you every week.